Recently we did that deep dive into Berga Corporation.
Oh, yes, I remember that one.
And looking at their latest report, which, well, frankly presented some challenges across the broader group, there are a couple of segments that really jumped out, felt like bright spots.
Absolutely. The gaming sector, definitely, and also Owen, their UK automotive business. They felt like, positive outliers in the mix.
They really did. It felt like a different story was maybe happening within those divisions compared to the overall group narrative.
Exactly.
Yeah.
And it makes you curious, right? What's actually driving that performance? What's going on under the hood there, you could say, at the subsidiary level?
Precisely. So that's kind of our mission today. We're going to take a deep dive specifically into Sports Toto Berhad, SPTOO. That's the company behind those segments.
Right.
We're looking at their latest quarterly financial report, Q3 for FY2025, and we're pairing it with the analyst notes you provided. We're pulling the key nuggets straight from these sources for you.
Okay. And just for anyone who might be less familiar based on these sources, Sports Toto Berhad, or SPTOTO. Well, it's primarily known for its number forecast operation.
It's NFO, yeah.
That's the Toto betting business. That's handled mainly by its key subsidiary, STM Lottery. But, as you said, they also have these significant strategic investments, particularly in auto retailing and after-sales services through Owen, which is based over in the UK.
It's that interesting mix, isn't it? Lottery and luxury cars.
It is an unusual combination on the surface.
So let's get right into the numbers then. Looking at this Q3 FY 2025 report, compared to the same quarter last year, Q3 FY 2024. What were the headline figures?
Well, the numbers looked quite strong, actually. Revenue, it increased by a solid 12.5%.
Okay.
Profit before tax, or PBT.
Right.
That saw a really significant leap, up 45.7% year on year.
Wow.
And then net profit surged even more dramatically. That was up 54.4% year on year. Those are pretty impressive jumps for just a single quarter.
A 54% jump in net profit, quarter over quarter. Okay, that immediately tells me something specific must have really happened to drive such a big increase.
Yeah, definitely.
The analyst notes you sent over mentioned that the cumulative 9-month results actually came in above expectations. Did they point to the main reason for that beat?
They did, yeah. The report explicitly says the stronger than expected cumulative results, so for the 9 months, were largely attributed to higher ticket sales.
Yeah.
Specifically for the Jackpot games.
Ah, okay.
So that was clearly a key factor influencing both the quarter itself and the year-to-date numbers.
Okay, so the core story seems really tied to the Jackpot. Let's try and unpack why those Q3 numbers were so strong then, looking at the segments. And let's stick only to what the sources detail here.
Right. So the primary driver in Q3 was definitely STM Lottery, the NFO business.
Yeah.
Its revenue grew by a pretty robust 20.8% year on year just in that quarter.
20% growth. Okay.
And this was explicitly driven by what the sources describe as an exceptional surge in the accumulated jackpot pool for one specific game,
Right.
the Supreme Toto 658.
Right, the big one.
Exactly. And on top of that surge in sales, STM Lottery also benefited from a lower prize payout ratio. Meaning the prizes they paid out were a smaller percentage of their revenue compared to the same quarter last year. So that further boosted its PBT increase in Q3.
Ah, that makes perfect sense. So you get a massive jackpot, brings in more people buying tickets, drives revenue up, and then if the payout ratio happens to be lower that quarter, your profit margins just expand.
Precisely.
That's that luck factor the sources talk about affecting the NFO business, I guess.
That's a big part of it, yeah. The jackpot size and the actual payout rates.
Okay. What about HRO and then, the automotive side? How did that perform in Q3?
Well, Owen also showed strong growth in Q3. Their revenue was up 14% year on year.
Also double digits.
Yeah. And this was attributed to higher sales volumes, both in new and used cars over in the UK market. Now, their pre-tax profit increased even more sharply. That was up 58.4% year on year in Q3.
Whoa, nearly 60%.
Yeah. Which aligns with the higher revenue, obviously, but it also specifically benefited from lower finance costs they incurred, apparently following interest rate cuts in the UK.
Right, so lower borrowing costs help their bottom line too.
Exactly.
So it wasn't just the lottery then. Owen really contributed significantly to that strong quarter as well, benefiting from both sales growth and better cost management through lower interest rates. That's a powerful combo for the quarter.
It really is. Two strong performances feeding into the group result for Q3.
Okay, now let's zoom out a bit and look at the cumulative 9 months of the financial year. That's 9M FY 2025. What does the performance look like over that longer period?
Okay, for the group overall, across the first 9 months, Revenue grew by 3.7% year-on-year.
Okay, more modest growth over the 9 months.
Yes, compared to Q3. But PBT, profit before tax, increased by a substantial 24.8% year-on-year over the 9 months.
A 24.8% PBT growth over 9 months is still very strong, though. How did the individual segments contribute to that cumulative picture?
Right, so for the 9M period, STM Lottery reported revenue growth of 6.0%.
6%.
Now, what's interesting here, according to the sources, is this growth happened despite having fewer draws. They had 123 draws compared to 126 in the same period last year.
Fewer selling days, but still growth. How?
Well, the sources confirm this growth was still primarily driven by that sudden surge in ticket sales from the Supreme Toto 658 Jackpot game we talked about.
Ah, so the Q3 effect is big enough to lift the whole 9 months.
It seems so. It indicates that jackpot effect, which must have peaked in Q3, significantly impacted the cumulative 9 months as well. And STM Lottery's pre-tax profit for the 9 months increased by a pretty similar 23.6%.
Okay.
Again, benefiting from both that revenue growth and a lower prize payout over the full 9M period.
That really underscores the power of that one big jackpot cycle. It just lifted the entire 9-month picture for the NFO business, even with fewer draws overall.
It certainly looks that way from the report.
Okay, and HR Owen over the 9 months.
Right. HR Owen saw its revenue increase by 6.8% over the 9M FY2025 period in its local currency.
Okay, 6.2%.
The sources state this was supported by, quote, optimistic demand in the used car sector and also contribution from adding the new Lotus brand to their portfolio.
Lotus, right?
However, there was an unfavorable foreign exchange effect when they converted their UK pound results back into ringgit Malaysia.
Ah, the Forex headwind.
Exactly, which diluted that growth slightly, resulting in only a 2.3% increase when reported in ringgit terms.
Okay, so Forex definitely took a bite out of that growth.
Yeah.
What about HR Owen's profitability over the 9 months? Q3 looked like a big jump in profit, but cumulatively.
Yes. This is where we need to be quite precise with how the source data is presented.
Yeah.
The Q3 report's commentary highlights that HR Owen reported a lower pre-tax loss of RM 1.4 million in 9M FY 2025 compared to a loss of RM 4.1 million in 9M FY 2024.
So it improved, but was still a loss over 9 months, according to that text.
Well, that text focuses on the improvement year-on-year, the reduction in the loss. However, if you look specifically at the segment results table provided in the report for the 9M FY 2025 period ending March 31st, 2025, the motor dealership segment actually reported a positive result or profit of RM 16.8 million.
Ah. Okay, so the table shows a profit for the 9 months.
Correct. So cumulatively over 9 months, according to that segment table, it was actually profitable and it improved significantly from a larger loss in the prior year period. The commentary just framed it slightly differently by focusing on the loss reduction.
Thank you for clarifying that. That's an important distinction based on the sources. So it shows definite improvement from last year and was indeed profitable over the 9 months, even if the text emphasized the loss reduction aspect.
Exactly.
But this still highlights the significant difference in profitability between the two main segments, even when their revenues look pretty similar in scale over the 9 months. Let's look at those scale numbers again.
Right. The sources give us the 9M FY 2025 figures. Toto betting revenue was RM 2,373.9 million.
Okay, 2.4 billion roughly.
And its profit contribution was a substantial RM 346.1 million.
Huge margin.
Then the motor dealership revenue was almost the same size, actually slightly larger, at RM 2,386.0 million.
Also around 2.4 billion.
But its reported result, or profit, as we just clarified from that segment table, was RM 16.8 million.
Wow. That difference in profitability margin is just stark, isn't it?
It really is.
The gaming business, despite similar top-line revenue in this 9-month period, generated vastly more profit. It really highlights which segment is the core profit engine for the group.
Absolutely. It shows the different business models at play, doesn't it? And the inherently higher margins you can get in the NFO business, especially during those favorable jackpot cycles.
Makes sense. Now, what do the sources identify as the sort of key factors that drive or maybe challenge each of these businesses?
Okay, for the NFO business, STM Lottery, they list factors like the public's disposable income, obviously. Those crucial jackpot cycles we keep mentioning. The general luck factor, which influences the payouts.
Right.
The persistent issue of illegal gaming operations, which is a big one. And simply the number of draws held in a period.
Okay, so luck, money, competition, and opportunity.
Pretty much sums it up.
Yeah.
Then for auto retailing, HR Owen, the factors are things like broader automotive trends, especially in the luxury market, supply chain dynamics, specifically for prestige and specialist cars in the UK consumer sentiment, inflationary pressure in the UK, changes in UK interest rates, which we saw help them this quarter.
Right.
And, of course, foreign exchange rates between the pound and the ringgit.
So one is heavily influenced by luck, spending power, and the regulatory or illegal market factors, while the other is much more tied to specific luxury auto market conditions and bigger macroeconomic things like interest rates and currency.
Precisely. And that foreign exchange impact, as you mentioned earlier, it's quite visible in the financials.
Yeah, the comprehensive income statement in the report, it shows a significant negative impact from foreign currency translation for the 9M FY2025 period, which is quite a contrast to the positive translation effect they had in the same period last year.
Yeah, it swung quite significantly.
That's a clear risk factor just showing up right there in the numbers.
It definitely highlights the exposure the group has through its UK operations. It's not insignificant.
Okay, let's shift gears a bit and look at how the company is managing its cash and allocating capital. The reports detail activity in share buybacks and dividends. What did you find there in the sources?
Right. The sources show some significant activity, particularly within Q3 FY2025 itself. If you look at the monthly breakdown for buybacks, SPTOTO bought back RM 15.405 million worth of its shares in January 2025.
15 million, okay.
And then another RM 4.596 million in February 2025.
Right.
So that totals just over RM 19 million in buybacks just in those 2 months within Q3. The report only lists December 2024 data for the prior quarter, Q2. And that showed buybacks of only RM 4.902 million.
Okay, so there was a definite noticeable step up in buyback activity within Q3 compared to the quarter right before it. What about the cumulative picture for the 9 months?
Okay, for the full 9M FY 2025 period, the total share buybacks were RM 24.903 million.
Nearly 25 million.
Now, comparing this to the same period last year, 9M FY 2024, buybacks were actually slightly higher then at RM 26.252 million.
Okay.
So cumulatively, buybacks were actually down a little bit year on year, but there was clearly a concentration of that activity, a ramp up within Q3 of this year.
Interesting. And how does that compare to dividends? How much was actually paid out to shareholders?
Okay, for the 9M FY 2025 period, the total dividend distribution was approximately RM 80.3 million.
80 million paid out.
Now, when we look at the third interim dividend that was declared specifically in Q3 FY 2025, it was 2.0 cent per share.
2 cents.
And this is actually lower than the 3.0 cent per share they declared in the same quarter last year, Q3 FY 2024.
Lower dividend per share declared in the quarter.
Correct. And the sources also show that the total dividends paid out in the first 9 months of FY 2025, that RM 80.3 million were lower than the total paid in the same period of FY 2024. That was approximately RM 107.0 million last year.
Okay, so that's a key finding then. They ramped up share buybacks quite significantly within Q3, but the total dividends paid out year to date and the specific Q3 dividend declared per share were both lower than the prior year.
That's what the numbers indicate from the reports, yes.
It suggests maybe a bit of a shift in capital allocation focus, at least for this period we're looking at.
It could imply that, based purely on these figures.
Okay. Turning towards the future now, what are the main risks and challenges that the company highlights, or perhaps that the analyst notes point to based on the sources?
Well, a persistent challenge, and it's mentioned clearly, is illegal gaming operations.
The gray market, yeah.
Exactly. The sources estimate this market is, well, alarmingly large, maybe 2-3 times the size of the legal market, potentially around RM 9 billion a year.
9 billion. That's huge compared to the legal market revenue we just talked about.
It's a massive figure. And the notes say stricter enforcement and penalties are needed. They also mention legalizing online betting, but note it's seen as tricky, given the social context.
Right. It's complicated. That's a huge leakage, though. What else?
Well, we touched on the jackpot effect being a major driver this period, right? But the sources also list jackpot cycles and that luck factor as key variables for the NFO business, which inherently means that the boost you get from one large jackpot isn't guaranteed to repeat.
Right, presents a sustainability risk for that level of growth.
Exactly. It's a variable, not a constant you can bank on every quarter.
Understood.
Then there's regulatory exposure. Specifically, the sources mentioned concern about the closure of legal NFO outlets in 2 northern states, Kedah and Perlis.
Right, that was in the news.
And the reports note the risk that this could potentially lead to more illegal operators just filling the gap in those areas where legal options are gone.
So a direct impact they have to navigate, and it might even worsen the illegal gaming problem there.
That seems to be the concern raised. And then, of course, we have the Forex risks we already discussed. That unfavorable impact on the ringgit conversion of HR Owen's results.
Still a factor.
Definitely. And finally, for the UK auto market itself, the outlook mentioned includes potential slowdowns. These are cited due to potentially weak consumer sentiment, ongoing inflationary pressures over there, and maybe impacts from global trade dynamics on the supply chain for those prestige cars HR Owen sells.
Okay, so they're facing quite a mix, aren't they? Market-specific issues in the UK, regulatory hurdles, macroeconomic headwinds like Forex and inflation, alongside the inherent sort of volatility of their core NFO business driver, the jackpots.
It's a combination of factors they need to manage for sure.
How does their overall financial health look based on the reports, especially thinking about cash flow?
Well, looking at the cash flow statement provided, net cash generated from operating activities was a healthy positive RM 199.3 million for the 9M FY2025 period.
Almost 200 million generated from operations.
Yes, which suggests pretty strong operational cash generation. Looking at the balance sheet snapshot, as of March 31st, 2025, total assets were around RM 3,977 million. Total liabilities, RM 2,725 million, leaving net equity funds of about RM 1,180 million.
Okay.
Total borrowing stood at RM 1,519 million. So, there's leverage, but the operational cash flow generation appears quite robust based on these figures.
And how does the analyst rate their financial stability or moat?
Yes. The analyst report you provided assigns SPTOTO a financial moat score of 6 out of 10.
6 out of 10. Okay. Did the sources give any justification for that score?
No. No detailed justification is included in the source material we have, just the score itself.
Okay. So a moderate moat score then. Yeah, what's the company's own view on the future prospects? What do the directors say?
The director's view, as stated in the report, is that they remain, quote, cautiously optimistic. They expect the group's business to remain stable and resilient.
Cautiously optimistic, okay.
They specifically anticipate NFO per draw sales growth to continue, driven by consumer spending and ongoing interest in jackpot games. They also express confidence that SPTOTO will maintain its market share lead in the NFO sector.
Right.
So overall, despite acknowledging the global headwinds, they expect their businesses, quote, to be encouraging.
So despite outlining some of those risks we discussed, they sound reasonably positive about their ability to perform and hold on to their market position.
That is the outlook presented in the source material, yes.
Okay. Right. Let's try and pull this all together then. Sports Toto Berhad, SPTOTO, delivered a surprisingly strong Q3 and also a solid cumulative 9M FY2025.
Yeah, the numbers were definitely strong.
Primarily fueled, it seems, by that really significant Supreme Toto jackpot surge, but also helped by a solid and improving performance from HR Owen, which got a boost from lower UK finance costs.
That combination really drove the results.
They generated good operating cash flow, nearly 200 million over 9 months, and they significantly increased share buybacks in Q3 specifically, although the total dividend payouts year-to-date are actually lower than the prior year.
Correct. And the results, as the analyst noted, came in better than anticipated, largely thanks to those specific tailwinds, the jackpot and the HR Owen improvement.
Which really brings us back to the core dynamic here, doesn't it? While that jackpot surge provided what seems like an exceptional boost this period, the NFO business is fundamentally subject to these variable jackpot cycles. And it faces that significant headwind of a very large illegal gaming market, which the sources estimate could be RM 9 billion a year.
That illegal market figure is quite sobering.
It really is. And then you add to that the challenges at HRO and things like the Forex effects, a potentially slowing UK luxury auto market, and those regulatory hurdles like the outlet closures in the northern states.
Those are the key variables and challenges that sort of determine if this recent level of performance is truly sustainable going forward.
Exactly. So the thought maybe to leave you with is this. Given how much of this recent outperformance was driven by a seemingly unpredictable jackpot cycle, and considering these persistent challenges, illegal gaming, specific market conditions for HR Owen, the regulatory issues, can SPTOTO really maintain this recent momentum?
That's the million-dollar question, isn't it? Or perhaps the multi-billion ringgit question.
Quite possibly. Or maybe, how will they successfully navigate those specific challenges noted, like the regulatory situation and potential rise of illegal operators in those underserved northern states? Something to consider as you digest these numbers.
Indeed, a fascinating look at the factors at play behind the headline figures.
Absolutely. Well, until our next deep dive,